99% of them. Okay, so let's see. So let's go back into the slide deck. All right, so as it's going up here, it's hitting that high day momentum scanner. We're getting audio alerts. And naturally, you'll see people in the chat room and you'll hear me commenting on it, giving my commentary. Oh, the stock's moving up. Let's do some research. Let's figure out why. Let it pull back. And then, this is what we're looking for, the pullback, because this helps us reestablish risk. My stop is the low of the pullback, and I buy when the first candle makes a new high. This candle, as soon as it made a new high right there, I'm a buyer. So I got in right there. My max loss is right here, and my profit target is a move back to the high of day. Now, I have seen this pattern thousands and thousands and thousands of times, so I know this is how it plays out. You might look at this and be like, well, geez, how do you know it was going to do this? You know, how did you know it wasn't just going to go back down? Well, let's think about the psychology in play here. We have a stock that just made a big move up, a couple big green candles. Why? It had news. On the first pullback, the reason it's pulling back is because some of the people who were in it from an earlier price are selling and taking some profit. But it's not going all the way back down. It is holding support, right? So it pulls back a little and then it starts to base out. What we like to see is high volume on the move up, light volume on the pullback. And once it bases out, this is kind of like the tide that goes out, goes sort of slack tide. And then when we see that first candle come back in, now buyers are coming in on this and we're going back up. This is a logical place to be getting in with a stop at the low. And now the next wave of traders are going to try to participate in the next leg higher. And a lot of stocks get not just one, but two, even three or four pullbacks. So stop is at the low. Entry is the first candle to make a new high. This is the setup right here. Stock is squeezing up. It goes from $5 to $7. That's awesome. Okay, it's on my scans. It's a gapper. The float on this, 3.94 million shares. You can see it right there on the charts. You can, of course, see it on the scans. It pulls back. Stop. Low of the red candle. Entry. The first candle to make a new high right there. Profit target. A squeeze through the high. It goes up to $8. That right there is a 10% winner. Boom. I'm done. Now, even when I've traded in tiny accounts, like $500 accounts, $1,000 accounts, I'm still trading these types of stocks. I usually, when I'm doing that, I'll put pretty much the whole account into one trade. So it's a $1,000 account. I'll put the $1,000 into one trade. But I set a max loss of usually 50 bucks. So I'm willing to lose $50, which would mean I'm selling the whole $1,000 position for $950. All right, so I'm in a $1,000 position. I'll sell it for a max loss at $950 of value, or I'll sell it at profit for $1,100, which is 10%. 5% loss, 10% profit target, just like that. All right, and boom, we got it on that trade. That was clean. That's what we like to see. Let's look at another one. This is exciting. This is what I love. Stock's hitting the scanner, it's moving up, pulls back, first candle make a new high, boom, it goes from $5 all the way up to over $8 a share. With a stock like this, this is where we have a lot of potential. The float's 2.15 million shares, it's got a ton of volume. This is what we love, all right? We find the stocks on the scanners, we let them pull back, we buy the first pullback, boom, we get the first leg up. This one gave us two, first pullback and second pullback right there. This one gave us a nice first pullback right there. Oops, back up. This one gave us a nice first pullback right here, curled up. This one gives us another one right here. And this one's a little choppy, but you know what? See, this one, it went like a little higher, but it didn't actually pull back. This is a pullback. This is not a pullback right here. It does pull back right here, but to be honest, it's not super clean. The cleanest trade on this one was right here. So when I was talking earlier about accuracy, by focusing on the best quality setups each day, you could trade less and actually make more. This is important. Less is more in trading. There's no sense in trying to take 100 or 200 trades a day. Focus on 1 to 2 really good trades. If you could consistently make 20 cents a share out of the market, 20 cents a share. Let's just set the bar low, 20 cents a share. All right, get the whiteboard out. So you're looking at 20 cents a share. So while you're a beginner trader, you're doing it with 100 shares. Okay, so you're making 20 bucks. Your daily goal is 20 bucks. When you get a little bit more experience, you go up to 1,000 shares. All right, now you're up to 1,000 shares. This is 200 bucks. Not bad. You go up to 2,000 shares. Now you're making 400 bucks, right? This is how it scales up. Now it doesn't scale all the way up to like 500,000 shares and making $2 million a day. Okay, that's not going to go that far, but it does scale up certainly quite a ways. And for most traders that I've known, they have been able to do well within the limits of scalability. Okay, so we've got this nice setup here. This is another one right here. We get the pullback, the move higher, the pullback, the pop up sideways. But again, that was the clean one. So what I would encourage you to do is print out these charts. Do a screen grab, print them out, put them next to your desk. This is what you're looking for. If you only master one strategy, that can be enough to keep your head above water, to tread water, to gain experience, to produce some historical data, and to see, whether or not you can actually make this work. Look, this is what Manoli did. He was a full-time worker. He was working at a mortgage bank. He was doing mortgages, but he changed his schedule so he could trade in the mornings. And eventually, he was making so much money trading that it was just a no-brainer for him to quit the regular job because it was costing him money by missing that opportunity. But he focuses on high-quality setups. Manoli goes really high quality and with bigger size. And he does a really great job of it. Hamang does the same thing. High quality, higher accuracy, bigger share size. This is where it's really pays off. Jess, Amazon FBA seller. By the way, Hamang is a pharmacist. He was working at a pharmacy at CVS, and then he started working actually at, I think it was GlaxoSmithKline. Anyways, GSK, the pharmaceutical company. And he was working there, but he was trading in the mornings. And just like Manoli, he was like, I got to focus on trading. Now, Jess runs an Amazon FBA business. So he's able to continue doing that while he's doing his trading, and he's diversified. All right, now listen, don't take my word for it. Give it a spin. Why don't you test out the platform? So here's what I want you to do. You'll see a link right here in the platform that you can click on. It's probably right up there, but there might be one down below. Give it a 2-week trial. Seriously, 2-week trial. Try it out. Now, if you do the 2-week trial, you're going to be able to get real-time market data. So you could use real-time market data, you could get the scans, you get the charts, and you could actually put this platform through its paces. We'll even give you some access to a few of my Warrior Pro classes, not the whole curriculum, but a few classes to see if you like what you see. And if you like what you see and you want to continue, hey, we'd love to have you. If not, no harm, no foul. It's a 2-week trial. It doesn't auto bill into anything. There's no strings attached. You don't have to cancel anything. It's just 2 weeks. Give it a try. And then in 2 weeks, let me know what you think. All right, so I hope this has been really awesome for you and you've enjoyed it. Keep exploring this platform. You can test it out. We have this loaded with some data so you can sort of, get a feel for what this looks like. And I hope to see you in the chat room. All right, so thanks as always for tuning in, and I'll see you in the chat room real soon.